This course is on income strategies and time decay strategies. So we'll start with a discussion on what exactly are income strategies. So income strategies are strategies that can perhaps produce a monthly income. So what we do with income strategies is that we depend upon time decay. And if we have to depend upon time decay, if time decay has to work to our benefit, then we are looking at credit spreads. So when we say credit spreads, we're looking at a bear call spread and or a bull put spread. So what happens is we are going to put probability on our side, we'll go out of the money, and we can sell either a bear call spread or a bull put spread. And on a daily basis, you're going to see time decay come into your account. Now, of course, like with any other strategy, the market can move against your position. So we'll need to see what are the proper adjustments. And I think we've covered adjustments in the adjustments course. You looked at how we adjusted price line in the last course. We looked at both a bear call spread as well as a bull call spread. You would apply the similar adjustments, but when you do a credit spread, you're going quite a bit out of the money, so you do have room there. And so the idea is that you can withstand a little bit of temporary pain, and even though your account might show a loss, but bear in mind you have to let enough time to let time decay kick in. And once you do that, and in general, you should see the effects of time decay coming into your account within a few days. So maybe like 5 to 7 days, you should start seeing the effects of time decay come into that trade. And as long as the movement has not been severe during that time, you should see a positive P&L balance as well. But if it moves too fast, right after you put the trade, if it moves too fast against you, then you may need to adjust. The more the time decay works on your position, the less you will need to adjust. So you need to give these positions some time, and assuming that they don't move very severely against you, then time decay is working in your favor. And even after two weeks or 3 weeks, if some move happens, then you are in a much better position to adjust, and your adjustment will also be a smaller adjustment, and you'll be able to protect your profits that you've collected in the last 2 or 3 weeks. So bear call spreads and bull put spreads are a good way to pick up time decay, to pick up income on a regular basis. But of course, we have to choose the strike prices, we have to look at the trade entry points, and we also have to do a little bit of analysis on the time decay. So which all of that we'll do in the part 2 of this course when we go into the trading platform. A good example of an income generation strategy was covered in module 2 when we showed you how options can be really powerful, and how if a particular investor was inclined to hold stocks or buy stocks with using puts, and then if they already had stocks, they could